Fear and Greed Index is a popular sentiment indicator that measures the emotions driving market behavior, specifically fear and greed. It helps gauge whether investors are feeling optimistic, greedy, or pessimistic, fearful about the market. The index ranges from 0, which signifies extreme fear, to 100, indicating extreme greed. It is commonly used as a contrarian indicator. How it works? The idea is based on the concept that extreme fear can drive prices lower, and extreme greed can drive prices higher, often beyond the fundamental value. Traders and investors use this index to assess market sentiment and potentially time their entries and exits based on whether the market is overbought or oversold. Components of the Fear and Greed Index. The index is usually built from multiple indicators that represent different aspects of market behavior. CNN's version of the Fear and Greed Index, for example, includes 7 factors. Stock price momentum compares the performance of the S&P 500 with its 125-day moving average to indicate momentum. Stock price strength tracks the number of stocks hitting 52-week highs versus those hitting 52-week lows. Stock price breadth measures market volume in rising versus falling stocks. Put and call options looks at the ratio of put options to call options, indicating how much protection or fear investors are buying. Market volatility uses the VIX, or Volatility Index, to measure market fear. Safe haven demand compares returns of stocks with those of treasury bonds, signaling when investors shift towards safer assets. Junk bond demand measures the difference between yields on investment-grade bonds and junk bonds, reflecting investor risk appetite. Levels of fear and greed. Extreme fear, which ranges from 0 to 25, indicates that investors are very pessimistic. This could represent a buying opportunity as markets might be undervalued. Fear, which falls between 25 and 50, suggests a general pessimistic outlook, but not at extreme levels. When the index hits neutral at 50, investors are neither overly fearful nor greedy, indicating balanced market sentiment. Greed, ranging from 50 to 75, shows that investors are becoming more optimistic and willing to take risks. This can signal overvaluation or rising confidence. Extreme greed, from 75 to 100, suggests that investors are very optimistic and markets may be overbought, signaling a potential for a market pullback or correction. Many traders use the index as a contrarian indicator, meaning they act opposite to the dominant sentiment. Buy when the market is in extreme fear, as this might indicate that stocks are oversold and due for a rebound. Sell when the market is in extreme greed, as this could signal that stocks are overbought and vulnerable to a correction. The index can help traders adjust their risk exposure based on market sentiment. In periods of extreme fear, traders might increase their exposure by buying more. In periods of extreme greed, traders might reduce risk by taking profits or increasing their hedge positions. If the index shows fear, while a stock or market appears to be fundamentally strong, it may present a good buying opportunity. Similarly, greed can signal an overbought condition, where profits can be locked in. Extreme fear, with the index at 20, might mean that stock prices are falling sharply, investors are selling off in panic, and put option activity is high. A contrarian trader may view this as a potential buying opportunity. On the other hand, extreme greed, with the index at 90, might indicate that stock prices are hitting new highs, and investors are overly optimistic. A trader might see this as a good time to sell or short, anticipating a correction. The Fear and Greed Index is a helpful tool for understanding overall market sentiment, but it should be used with other technical and fundamental indicators for making well-informed trading decisions.